right.
Well, I was just asking you about the food videos. There's this guy. Ellen actually hired him now, the show Ellen.
Yeah. He's a chef.
No. He started watching these videos of people making food.
Yeah.
And he's live commenting on it. Hilarious.
Is it?
Yeah, it's funny. Anyways.
What's up, you guys?
What's
Friday.
up? Happy Friday. Hey, it is Conversation Corner 102. This is our second one now.
Yeah.
And what are we going to be doing it
What
on?
are you doing the 102 for instead of just 2?
Well, because the first one was 101.
It's like 101.
Now it's 102,
okay.
the second one in the series.
Like, make it podcast official,
Yeah, it's podcast official. So, 10 things not to do when applying for a home loan or in the process of purchasing your house, which is kind of the same thing. But before we get into that, because we want to let some other people get on here, if you have questions or comments throughout this, Allie is actually the one behind the camera here. So she will read off those comments to us, and we'll answer them for you live. If it isn't live and you see it later, comment, Levi and I will answer those questions depending on who it's directed to.
Yep.
And we'll go from there. So as we wait for some people, I know I was just talking to you about this guy. I've got a question to ask you, and it's random.
Okay. Have you thought of it though now?
Yeah.
Okay.
If you could have anything in your fridge at any given time, like it's a must-have for you, what is that thing?
Ooh, that is hard, man.
That's why I think about this question.
For a minute I was like, what's in my fridge right now? Not a lot, so it won't be something that's in there. Don't eat not a lot. So, gosh, that's tough. See, I would say like fruit or something, but I don't keep a lot of fruit in the fridge. You know what I'm going to say? Fresh herbs, honestly.
Wow.
Yeah, because I make a gang of chicken, and you gotta have
fresh herbs.
You gotta have the fresh herbs.
That's why you're so slim.
Yeah.
He eats really healthy.
Yeah.
Man. Okay, that's good. Mine is pretty simple. I mean, I tell Allie this all the time. I'm a dairy guy, so like I love milk.
Yeah, that would be my number 2.
Ice cream, cheese, oh man. If I didn't have that, I'd die. Literally. I mean, Allie's like, no, you wouldn't. But I'm like, yes, I would. I would forfeit my life if I didn't have
Fair
that.
life, lactose-free, whole milk. That's the way to go. Yeah.
Whole milk. That's what's in mine. Anyways, okay, we're going to move on here. 10 things not to do, Levi. And it's kind of important because I know both of us have gone through situations where these things have happened. And it makes us pull our hair out, and it really, and the reason for that is because then we get really nervous because we don't know if the loan is actually going to go through. So the first thing is, Allie's like smiling over here. We must have got a comment.
Eric Catalano said
Eric.
Every gallon of ice cream requires a case of toilet paper.
See, Eric shares. Yeah, Eric and I are both lactose intolerant, so yeah.
That's funny. Okay,
thanks, Eric.
Thanks, buddy. So number 1, which we got down here, is change jobs. Why would I not want to change a job in the middle of a transaction?
That's a great question. Well, first and foremost, when you go through pre-approval process for a loan, we use your current employment to qualify you for different loan products that you're looking into, and based on which one ever makes the most sense for your goals, that's the product that you're going to move forward with through the transaction. So if you happen to change a job during a loan transaction or as you're shopping for a house, it can create some conflicts because you've already set up a working budget to shop for houses based on what your current employment situation is. If you change that, it can create conflicts and things because depending on the overlap with pay, as well as offer letters and things like that, it could potentially jeopardize your escrow if you are under contract to purchase a house. So I've had situations in the past where, clients have gotten fired from their jobs and didn't tell me about it, and we found out the hard way through verifications of employments and things like that, and it always makes...
That's not good.
It always makes loan processes that should be smooth rather challenging because you have to do escrow extensions and things until they can find new employment, and it can get a little bit challenging. So stay on your current job.
Touche.
Eric Sandstrom says, "What's up, Levi?"
What's up?
What's up, Eric?
How come everybody's talking to you? Nobody cares about
both
me.
Those guys are lenders too.
Okay.
Good buddies of mine.
All right.
Yeah.
Word. Okay, I gotcha. Number 2, buy appliances, furniture. Here's the big one that I think more so than appliances and furniture, because a lot of times some of those things come with the house or whatever. Some of them don't.
Yeah.
But if you're going to Nebraska Furniture Mart and you have a Nebraska Furniture Mart card, don't go buy that stuff until afterwards.
Yeah.
Here's what, if you're really smart like Vanessa and I, this is what we do. We find our parents that have a Nebraska Furniture Mart card. We go use their card. We put it on their card, and then after we close, we pay them off. So if you have to do that, there's an option for you. But whatever you do, don't put it on your card.
And don't tell your lender that you did that either. Jeez.
Right. Don't do that either. Considering mine's sitting right here next to me. Whoops.
Yeah.
But we already did that a long time ago.
Yeah, okay.
So the big thing, though, is I think that some people don't think about is they go and buy a new car.
New car.
And new car seems to be the big one where you're like, what?
Mm-hmm.
I literally, no joke, story, I'm like 2 weeks out from closing, and I'm working with some clients, and I get a call from the lender, and they're like, hey, did your client go buy new motorcycles? And I was like, plural? Plural? And she's like, yeah, like they went and bought 2 new motorcycles. And I was like, oh gosh, okay, I gotta go talk to them. So I go call them, and they're like, yeah, we did. What's the big deal? They were on sale this weekend. And I was like, oh no. You need to call your lender ASAP, and we need to get it figured out. What happened is they saw this sale. They've always wanted motorcycles, I guess. They went and bought these motorcycles 2 weeks before we're supposed to close, and the lender was like, they can't close because they bought those 2 motorcycles now. So, like, they need to go return them, and then 2 weeks later go back and buy them again.
Oh, my gosh.
So, that's what happened. They went and returned their motorcycles.
Wow.
They closed on the house, and then they went back and they
later.
bought their motorcycles
Jeez.
as a moving gift into their new house. But
Interesting.
yeah, you can kind of speak on that a little
That's
bit more.
another
Maybe
challenge.
you have some stories.
Yeah, that's
but
another challenge too. If you're adding a new trade line or a new credit account, whether it's a credit card, installment loan, like a vehicle purchase or a motorcycle purchase, again, when you've gone through the pre-approval process, the lender's going to look at all of your revolving installment debt, and we're going to use all that information to help put together a working budget for you, and also to calculate your debt-to-income ratio. Certain programs have strict guidelines with your debt-to-income ratio, and you can't exceed certain percentages. So if you go buy a new car and it's $400 or $500 that you didn't have before, that could put you in a difficult position with your purchasing power, because it will raise your debt-to-income ratio, which also could make it difficult to still qualify for that house that you're looking at. So keep that in mind as well. I've seen that before myself, and it can be definitely difficult.
what about, this is going to kind of move into number 3, not using your credit card excessively.
Yeah.
But, okay, so what do I do? Because a lot of people are told, hey, in order to build your credit up, you go move stuff over to a credit card and pay it off monthly and whatever. So what would you say to that as far as using the credit card? How should I use my credit card if I do use it?
Yeah, usage, so a couple things there. This will play into one of the things not to do, but also it's a kind of a different segue. Usage is a big portion of your overall credit score and how your credit score is figured out through Fair Isaac. So the general rule is that you want to stay below 50% of your maximum available balance for it to be a really positive for your credit. If you're maxing out every single one of your credit cards, it's not going to look super good as far as a credit rating standpoint goes. So to speak on your question, certainly going through the mortgage process, you don't want to be using your credit card a lot. And I would say leading up to, if you're looking into purchasing in the near future, try to pay down some of those accounts as long as it's not going to break the bank or eat into your down payment or your closing costs. Maybe try to keep those accounts a little bit lower, because ultimately it will give you a much better credit score, which will also give you better interest pricing long term, but it'll make sure that you don't have any complications, again, with your debt-to-income ratio and having new accounts or anything like that.
Good.
Yeah.
I like that.
Yeah.
Now, so here's a question, because I just thought of this because I'm a business owner, obviously.
Yeah.
And I have a business credit card.
Mm-hmm.
What part does that play in it, if it plays any part at all?
Well, so if you have, I have a business credit card as well that I use for business purposes and stuff. So, but that will still report onto your personal credit. So it's essentially the same answer. There's no real difference. If you're, you got an Amex and you're charging it up every single month and then bringing it down every single month, you might just want to communicate that with your lender to let them know what's going on there. So, if your Amex is $1,000 and it shows your payment's going to be $1,000, that'll throw your debt to income ratio out of whack a little bit. So just communicate that with your lender that you have paid it off, and they might need to do a credit supplement or something just to show that that account has been paid down. Yeah,
that's good stuff.
Yeah.
So I think this is number 4. Number 4,
What do we
which
got?
seems obvious, but do not spend money that you have saved
Okay, I see it.
for your closing costs. Which I'm gonna expand a little bit on that because obviously you want money set aside for that. But how soon will they know what that ballpark figure is so that they can have that money saved?
That's a great question. So most lenders, guys, when we start the loan process, you get under contract on a house. We're going to want to disclose the loan, do our initial loan disclosures, just to get those out, get the process rolling. That's an acknowledgement of how the loan process was started. It doesn't set those terms in stone by any means, as we definitely work through them throughout the process. Those numbers, the initial numbers, tend to be a little bit high because we err on the side of caution until we can balance with the title and escrow company. So as we work through the loan process, we're updating those figures. You're going to get a more exact approximation or close to as you move through the milestones of the loan, and it really depends on the lender, their time frame, as well as the title and escrow company's time frame that you're working with. Just circle back around to what was the question again as far as that? Spending
your money
Yeah,
that you have saved.
Yeah. So what I've found a lot of times with clients is, we do those initial numbers so they're a little bit high. As we start to iron them out and they go, oh my gosh, it's not going to be this amount of money, it's a lot less, that's great. So then they start to go, okay, now I can go buy this new couch or buy this new that or this new that. And they start decorating and filling their house full of items before they even have their house. So that's something I would avoid as well.
Yeah, I would agree. Number 5, omit, what is that?
Debts.
Or liabilities from your application.
Yeah.
I'm assuming that's the application from the lending side. There's no application here to go through on this side with a realtor, but...
So with technology these days, it's hard to admit or to omit anything. When we pull credit or you pull your credit and we take a look at it, all of your reported liabilities, revolving installment loans, things like that, are going to show up.
Yeah.
The only ones that don't are like if you have personal land contracts, liens, things that have not been recorded to credit. Which I have some clients right now who have a land contract that we've had to kind of factor into their debt to income ratio and had to get the note to make sure that we had all those numbers factored in and stuff. So when you're looking into purchasing, again, just be real upfront with your lender. They have your best interests at heart. We have your best interests at heart. The information that you give us, we're not necessarily just going to go regurgitate all that to, an underwriter or anything like that. We're going to take it and sift through it, and we're going to make sure that we only do something that's within your best interest. So let us know everything you got. We'll work through the numbers and make sure everything makes sense for you.
Moral of the story is, don't lie.
Yes.
If you lie, you get caught.
Yeah,
you get caught.
Everything will come out. I mean, through the loan process, there's so many verifications that we pull, so many different things that we have to do, title searches, fraud guards. So if it's out there, we're going to find out about it. It's better just to be upfront and honest in the front end so that your lender can plan accordingly, do some problem solving if there are problems there, and help you overcome those obstacles so you can get your house.
Even better if you're married. I've been in this situation before, and it's not pretty.
You've been in a married situation before.
Well,
it's not pretty.
No, I mean, my marriage is great.
Kidding.
I've been in this situation before with married couples.
Yeah.
And they're going through kind of these liabilities and things, and they're like, a credit card for $8,000, a credit card for $10,000, and the wife's like looking at her husband, and he's like, oh, she doesn't know about those, but now she does. That's not the place you probably want her to find out.
True.
So, anyways, again, moral of the story, don't lie, be upfront with each other, and you won't run into those issues. Number 6 is originate
inquiries. Okay, inquiries.
into your credit.
Yeah.
I'm going to let you speak into that a little bit.
Yeah, so there's a couple things. Now, there's this big misconception. Allie's trying to say something.
Remind people to ask questions.
Oh, yes,
yeah.
you guys, if you have questions, anyone tuning in, comment down below as we kind of go through our spiel here. Let us know if there's something you want us to address. Allie's reading the comments, and we will answer those questions. But to get back to that one, number 6, talking about credit and inquiries, there's this big misconception that having a mortgage company pull your credit is automatically going to ding you like 20 or 15 points or something like that. There is a potential for your score to go down with any hard inquiry, but the CFPB worked with the Consumer Financial Protection Bureau.
Okay.
Sorry,
No,
the
you're
acronyms.
good. You're good.
Remember those?
Yep.
But they worked to reform the Fair Isaac rating system back during the mortgage crash, and how mortgage credit is looked at nowadays to let would-be home buyers shop for lenders to see who they want to work with. It actually allows you to have your mortgage credit pulled several times within a 60-day period where it's not going to affect your credit score negatively. It's actually looked at as one inquiry. So that's a good thing as far as a mortgage standpoint goes. The other inquiries, though, that we're talking about to avoid are going to be like, you're under contract, you're going through the loan process. Don't go apply for a new credit card. Don't go apply for the car loan. We touched on that.
Don't go to Nebraska Furniture
Yeah.
Mart and apply for their credit.
Right.
Wait until after you close.
Even if you don't actually establish a new account, just the part of going through the application process, usually you have to do a credit certification where you list out all the inquiries that we've seen on your credit and say what they are and explain those. So it's just better to avoid it.
Word. Number 7. Do not deposit large amounts of cash
This is another
without letting your lender know. Here's the deal. I run into situations, and you can probably verify to this, where you might have heard of like gift money, right? So like parents or grandparents or whoever give you money to put down as a down payment on your house or whatever. I've been in situations where those have been large sums of money, $20,000, $30,000. Thank you, Grandma and Grandpa, who do that for you. And what they do basically is they go put it in their account, and then the lender calls and they're like, where did this $20,000, $30,000 come from? Well, it came from my grandma as a gift. Well, now we got to get a letter for that. I'll let him speak into that a little bit, but that's maybe where you were going to go.
Yeah.
But
or if you're a saver and you don't like banks as much, I have a lot of clients who have mattress money. They save over several years, maybe even a decade, and they're holding on to a portion of each one of their paychecks, and they don't want to keep it in the bank, and they might have several $1,000s at their house.
I want to know where they live. Just joking.
With the idea of, oh, hey, I'm just going to use that as my down payment, my deposit. Well, Ryan had touched on it. The trouble with that is if you deposit this big lump sum of cash and you're unable to source its origin because you've accumulated it over such a long amount of time, it's going to create an issue with the lender because we have to have verified funds or seasoned funds for all of the monies that are being used throughout the mortgage transaction. So a lot of times when there's a situation like that, it's better for that type of client to actually just get a gift from a family member or a friend and make up the difference, because we're not going to be able to, more often than not, we're not going to be able to source the origin of those funds. So we just have to educate our clients about that and walk them through the process, make sure that it all makes sense.
Amen to that. Amen to that.
What do we got
8,
next?
change bank accounts. Why would I not want to change my bank account?
This is a really good one, because normally, and it depends, most lenders go off of our underwriting software on what documentation we're going to require for each individual. So every individual's docs needs list is going to be unique. Typically, we need at least 1 month, the most recent month of of your bank statement. Sometimes we also need 2 months to, again, source funds, verified funds, and we have to see all pages of the bank statement. So if you go and create a new account just for the loan process, so to speak, there won't be any new statements because they take 30 days to generate. So we have to be looking for transaction histories and things like that. And it's just going to be really hard to document the transfer of money from one account to the next. So it's better to have seasoned funds, money that you've had in your account for a couple of months, and just to use your primary accounts for the purchase of your house.
Which moves into number 9, which is don't transfer money from one bank account to another.
Yep.
Because of basically what you were just talking about.
Yeah, and this one, you can do this.
It's a little easier to track.
You can do this. It's easier to track, but every account, I tell my clients, hey, as far as collecting your asset statements and your bank statements, we only need to involve the accounts that you plan to use through the transaction. I don't need to see all your retirement, your savings, your 401k, unless we're trying to use those for cash reserves. So typically we just want to see like a primary checking or a primary saving, wherever the money for the down payment and closing costs are coming from. But, like myself, I have 5 or 6 different checking banking accounts and things like that, and they get allocated to help me organize my own money.
He's a big deal.
No. But, and a lot of people do. A lot of people have several accounts, and they transfer money each month between different accounts to help them budget and save money as well. So if that's the case, we just have to see bank statements for each one of those accounts to source the transfers from account to account, just to kind of tie everything together.
Cool.
Makes sense.
Yeah.
Yeah.
The last one, number 10. We are there. Apparently we don't have any more questions, Allie? Nothing? Come on, man. That's all right. Co-sign a loan for another person. Yeah, that kind of seems like common sense.
Yeah.
But
Yep.
you probably don't want to co-sign a loan for your sister buying a new car or them buying a house.
Right.
Because now that you are held liable for
Exactly.
more debt.
The payment.
Right?
Yep.
And your debt to income ratio
Yep.
can get skewed.
Even if you're not making that payment directly, if we're not able to prove for the last 12 months, go back the last 12 months and show that you haven't been making those payments, it's going to count against your debt to income ratio. So if you co-sign for a daughter or son on their car, or a niece or nephew, or whatever it is, whatever that payment is will also get factored into your debt to income ratio. So yeah, don't do
Sweet.
that.
Yeah, do not do that. So hopefully that does it for today, Conversation Corner 102. And I still love the name,
Yeah.
And people are probably wondering where we got Conversation Corner from. We got it from Allie, because she's smart and wise like that. She comes up with all these great ideas. And, we got 2 chairs.
Yeah.
And we're in a corner.
And we're in a corner.
And we're having a conversation.
Yep.
Pretty simple. But just in case you wanted to know where that came from, that's where it came from. We are planning to do this fairly rarely, once a week, maybe. We might miss a week here or there, but our goal is to basically talk about some things that you will need to know from a buyer standpoint, and then the next month we'll move over to a seller standpoint, and we'll just keep going back and forth, buyers and sellers. So hopefully we'll educate you a little bit, inform you, and answer some questions as you're someone thinking about buying or selling your house throughout the year. Again, for me, my average client is 3 to 18 months out from purchasing a home or listing their home. Typically, listing's a little bit different. We're about, at the most, I would say like 3 or 4 months out. But with buyers, 3 to 18 months out. So if you're in that boat and you're like, okay, I know that we'll probably buy, but maybe not till the end of the year, or maybe even into next year, it never hurts to sit down, grab coffee with me or Levi, and we can kind of help set out that plan for you to help you reach and achieve that goal by your end date or your time frame there. So, with that being said, thanks guys again.
Happy Friday.
Happy Friday. We're always happy about Friday.
Avorsky.
Sup, Levi? Nick says hi.
Hey, buddy.
This is horrible. I'm just going to start letting Levi do Conversation Corner because everybody's
Bitch.
saying it's up to him.
Yeah.
It's all good. No, it's all good. With that, thanks. And apparently I need to get myself a pair of Converse All-Stars because
It's casual
Levi's rocking his, Allie's rocking hers.
Oh, yeah.
And I'm rocking dress shoes, apparently.
That's okay.
So for Casual
You're
Friday,
showing us up.
I don't think I'm showing you up. I think you guys are showing me what I need to do because it's
All
Casual Friday. So, anyways, thanks guys.
Have a great
we'll
weekend.
talk to you soon. And if you have any questions and you didn't ask in the video, which I know a lot of you haven't, comment below.
Sure.
We'll touch on those.
Yeah.
And if you have any ideas for us moving forward or any topics you want us to discuss, let us know as well, and we'll do that. Thanks, guys.